Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:34 p.m. on a cold evening here in the New York, New Jersey waterfront. It is April 17, 2018. This is a strategic free market update webinar. I believe it's going to be a very exciting one. I'll keep it short and straight to the point. I'm going to be showing a couple of new things which would be very helpful for your trading and your mental confidence in making money in financial markets, especially volatile markets. This session will be recorded and uploaded to the Clueless 8 YouTube channel. A little plug that I always do. The Clueless 8 Trading YouTube channel is a free, has free access to anybody who has access to the internet. And I highly encourage all of you to go ahead and spread the word to all your friends and colleagues who would be interested in learning some of the real facts about what happens in the financial markets, and not only just what happens, but how to make money off them and get a real full, deep understanding of the dynamics that play out and which are not talked about in the media. On that note, I thank you all for your support. We just passed our 4th anniversary. We're kids in the woods, you know. We started Clueless 8 Trading thanks to many of you who are still with us from day one on April 15th, 2017. So it was pretty much on Sunday. It wasn't a Sunday when I started the service, but April 15, 2014. It's only been 4 years. That's a long way to go. And in this short amount of time, we have educated, helped, benefited, and enlightened a lot of people who are here, who have come and gone, just standard normal business stuff. And shown the real story of what really happens in the markets, how to read the tea leaves, how to understand tactical charts, not rely on your emotions for making strategic decisions with your hard-earned money. And I believe that I have offered a fantastic service for a very small amount of a subscription fee, and hopefully have helped many of you and still helping many of you to move forward. It has been a fantastic experience for me. I never wanted to start a trading service. I'm pretty much a lazy bum. I like to just trade my own trading book without having any bother about worrying about what other people are looking at, how they're understanding things and stuff. But I will tell you, just like everything in life, when you start a project and it takes a life of its own, thanks to all your support, it has been a great learning experience for me. I am forced to basically explain things, which has in itself opened up the neural networks in my brain to understand in a much more deeper fashion what markets do, which I probably wouldn't be as rigorous and disciplined if I was doing it completely on my own, because now I have a added responsibility of educating all of you Clueless 8 Trading members on the dynamics of what happens. So I'm forced to look at it, which in many cases comes naturally to me. So on that note, I do thank you all on our 4th anniversary of Clueless 8 Trading. We are going to be growing in an exponential way. And I believe the word, I rely on I rely on all of you, because we don't do heavy duty, crazy, outsized, aggressive marketing. Organic marketing, what we do, 90% plus of our people come through referrals. So I highly encourage all of you and request all of you to go ahead and spread the word. Bring all of them in and see how the money's made, which you guys all see. On that note, let us begin. We are just a quick follow-up from our previous webinar, which was on Sunday evening. Just seems such a long time ago. It is extremely important that all of you review that particular webinar, because this is a continuation of what we spoke about there, and not just spoke about, what was shown, forecasted. That is exactly to the dot is what is going on as we speak. So tactical precision forecasting is a very tough business. The guy's getting paid $30 million a year. I mean, not 30 million, $10 million a year, $5 million a year, $1 million a year, sitting on the upper echelons of Wall Street, can't even figure this market out. And here I am, a we're like minnows, we're pikers in the big world of big money, calling the shots on the market, and not just the first time, many times, and it is happening exactly as it's forecasted. So this is not this is no kudos to me, but I highly, as I always do, in a very direct way, in a very New York fashion, motivate all of you to wake up, smell the coffee, study a little bit of what I'm doing, act on those trades, on your own, internal decision, and make money. That's just, that's why you're here to in trading. Um, and so bottom line is that I am, the more I do this, the better I get at it. And many of you might not be at this higher level of understanding the dynamics of these tactical charts that I show repeatedly, but at the same time I try to make it as simple as possible that all of you can gather from it. I don't want you guys to be PhDs in technical analysis. I'm certainly not. I self-taught myself a significant amount of the stuff after getting some basic training from some of the bigwigs on Wall Street many years ago. There's a traditional way of looking at markets, but these charts are not that difficult to understand. And before I start, I will say one thing which is extremely important, which all of you will agree with me, is that it's not about what I'm putting across. It is your mental fortitude, and your confidence is what's going to make you the money. I'm putting premium content out there. It's like writing out $100, checks, or giving out $100 bills every day to all my members. Question is that are you mentally ready to accept that? And that's really what it is, because the trades that we're showing and the trades that we're doing are substantial. It doesn't matter if you sell a little bit too early. It doesn't matter if if you didn't make as much as you thought you would make. The fact that you have to be in there, you have to be in it to win it. So when you don't even do a trade, or you freak out because there's a little red candle like that comes along on a on a 15-minute, this being a 15-minute chart, a small 15-minute candle, even a teeny weeny one like that, and you freak out and you sell it, and you keep on doing this thing repeatedly, it's extremely dangerous to your mental and financial sanity. So on a positive note, change right away. It doesn't take years to change. I'm doing all the work, showing you guys all the stuff on a real-time basis. But you guys have to, many of you have to mentally just do it. That's it. Let me just put this line out there. Sorry. So that's that's the most important thing. The content is probably some of the best that's out there. No question about it. No one. I very seldom come across, and I look at a lot of different people who are, calling the market shots and what's going to happen with individual stocks and stuff like that. And I think many of you will admit, honestly speaking, that the caliber of material content, precision content that I'm delivering on a constant basis, not just 1 day or 2 days, but constantly, is worth your time to utilize and make money for yourself. And there's not many services out there that I have come across or I've seen which do this as consistently as you do. So sometimes when I go ahead and push, people to act, not just sit there and stay scared when all this good stuff is just coming along the way, these hundreds of dollars and thousands of dollars that are being laid in front of you, all you have to do is take it. You got to take that trade and take that money home. But when you constantly don't do it, it kind of, I feel bad. In the not that you're going to make any difference to my financial well-being, but I just feel bad that so many of you, maybe I'm wrong, I hope I'm wrong, that so many of you are not making the money you should be making. I'm not making the money that I should be making, to be honest with you, because with these type of calls, I should be making a lot more. But at least I am above my average performance level, and doing much better than a lot of you. And people have this communists and socialists have this excuse. Well, I don't have that kind of money. Well, I don't have that kind of money either. And that's the biggest excuse anyone can give with these type of volatile markets. And this is the best part of the whole game. With these type of volatile markets and the way we're charting it and the way we are projecting, which are coming right 80 to 90% of the time within the time period that I'm saying it's going to come right, you don't need that much trading capital. With smaller trading capitals, in fact, you have a bigger leverage to jump forward and double that or triple that. Because when you're working with larger amounts of trading capital, you are in danger and risk of losing more, because when these type of little flash crashes happen and volatility moves that happen during the day, all of a sudden, boom, market drops 50 points, stocks are down, which were up 6, now down 6. You are going to be mentally not ready. And it's hard, believe me, if you have large positions in the works and you're not making and you don't have the luxury of watching it minute by minute, second by second that I do, because this is my living. So in a way, it's great that you are not working with, some of you are not working, or whoever the people are not working with larger amounts of capital, because you will not only make bigger mistakes, sell out at the worst times, not get in, or not take profits because you're getting all euphoric because the money's just like moving fast. Instead of having 2 contracts, you have 20. You see how fast the money moves in one position. And let's say you have multiple positions with in excess of 10 or 20 contracts. It's just like pop, 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 boom, money goes. I mean, your P&L just moving fast when we get these algo blasts and these candle moves, right? And then you get greedy and you don't sell, and then bang, just within 15 minutes they do a little sell job, and all of a sudden your P&L shrinks, and because you didn't get in there because you were just too engrossed in how fast that P&L was moving. And then as the market's moving up a little bit, you sell, and then you see it go higher again. So in a way, it's great that people don't trade with larger amounts of capital in these type of volatile markets, unless you get those perfect moments, in which case no one bothers to buy. This is which is those 600, 700 point drops. And you know exactly what I'm talking about. When the S&P is making those double bottom hammer reversals like that, these are the times you need to put the most money, aggressive money in the markets, these times. But no one does. It's just the nature of the beast. I can't change that. Because at that time is the moment of big uncertainty. But if you this is the beauty about Clueless day trading and my tactical charts. As you see these representations of these big fat green candles, the hammer reversals, the even this is a hammer reversal, even though it was a down day, with the stows moving up and all that good stuff, that I teach in detail. You can you don't have to buy this aggressive low, because there is uncertainty there. But as it moves on, and the follow through days, the number 4 days, and all that stuff, everything that I lay out, you can go real aggressive. And this is where we are right now, with a small room to go up to this level. So what I'm getting at is that you don't always have to be, these are the points of maximum aggression. And there is almost zero participation by traders. Even now, there is very minimal participation. That excites me. Why does it excite me? Because the lesser amount of the higher the fear and the emotional trepidation and doubt and fear, which is constant in this type of market. And I see that. I see that within my members. I see that outside. No one believes this market can go higher. So bottom line is that the higher the level of fear, the better it is. Why? It's simple. This is true of institutional money managers. It's true of retail traders. or I like to call retail emotional traders, is the money sitting in cash, not going to work. The money that doesn't go to work and make these type of 600% type of moves, because that's really what the returns are, or more, to be honest with you, on option trades, from these levels, is 600% that you lost. Why? Simple. 600% that you didn't make is 600% that you lost, because you're sitting in cash and you don't want to act. Now, this is true of institutional money managers too. A significant amount of them are very bearish. And this is great news for the markets on the longer term. Because when markets, and I'm going to show you a chart today, which is called the Bullish Percentage Index, and you will see it in actual reality. Okay, and this is the New York Stock Exchange Bullish Percentage Index, BPNYA. Is all that cash sitting on the sideline at one point or another will come into the market. But by that time, this is what happens. It's already overbought. And my charts are so clear on those overbought and oversold conditions. You know exactly that within a matter of days, the market's going to drop, or if not, within a matter of hours. So I think I made my point, what I'm saying, guys. All right? You guys are all grown adults, ladies and gentlemen, guys and gals, and you know what's going on. But mental change is very difficult, very difficult. Everyone's stuck in the same old routine. All right. On that note, let us begin. So I'm going to make this quick. So here is the daily chart. So you're looking at a swing perspective on the markets, not the intraday noise of, 15 minutes, this is down, 20 minutes, this is down, all that type of stuff. This I've been showing consistently. I probably am one of the only guys out there, and please show me other services or somebody else chart on StockTwits or other trading forums that you're in, because I would love to talk to that type of person, because I'm looking for somebody who thinks like me. I really am. I really want to converse with them, maybe work with them jointly. Well, I'm a solo player, so I don't like working with anyone jointly, but I'd like to find out, because who in the world came up with this idea of a macro falling wedge that I drew in the midst of 700-point drops in the market? I saw it. It was like a revelation to me. And the best part was, you all saw it, because I showed it to you guys. And I told you that this macro wedge is serious business. And this is not a 1 hour, 2 hour. This is a daily in the midst of the most volatile market that we have experienced in years. So right there, the fact that I identified this macro falling wedge is just huge. It's huge. Because now that I'm, and I said this was macro falling wedge, it broke out of it, it fell back into it. The stows kept on going higher. I don't want to keep on repeating the same thing. They're still going higher to a certain point where they're going to start curling down, and we're going to have 3 or 4 days of these 400-500 point drops. So the only thing I beg you guys, okay, especially my beloved members, to be honest with you, is don't keep on making the same mistakes over and over and over again. You see these type of consolidation moves, I'm showing things. When I show them, act on them. Put some money in the game. Because right now we're reaching short-term severe overbought conditions. We're getting there. Now we could blow past it for a simple reason, because there is a significant amount of skepticism. The fear index is still, not that it's a very reliable indicator, but still it's a good cursory indicator. It's still sitting in the 20s while the market is ramping, and individual stocks are ramping. How many winners have I shown? So it's a good sign. So saying all that, this macro falling wedge was a revelation which printed money. And many of you who understood this, I explained it clearly on my webinars, on my real-time posts, are minting money. So this macro falling wedge broke out. This is what's going on. Keep it real simple. This is your level here where the market basically collapsed. This is not rocket science. This is a major supply zone, right? That's when it just like bang, it went. because till here it was still a consolidation channel. If you guys remember, it wasn't that long ago. It was back in March, even though it seems like years, right? Volatility tends to screw up our biological calendars, mental calendars. So this was still a falling wedge till this happened for reasons we already know. I don't want to repeat. Bang, 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 crash and burn, 1,300 points we went down, and then heavy volatility. So bottom line is, this is a major supply zone when the dam broke suddenly. And that is 27.25. We are at 27.12. We'll get 27.25 tomorrow, in my opinion. Or tomorrow's Wednesday. Maybe we wait till Thursday. I don't know. Okay? It's right around the corner. It's only 12 points on the S&P. So do the math. 12 times 7 is the what? 112 points, right? 118 points. So I'm sorry. 12 times 7, like my brain's mush, is 84 points. So 84 points on the Dow, big deal. We can do 84 points on the Dow when we wake up tomorrow morning. So we are right there at that juncture. Now, with these type of supply points where heavy duty damage happened, trillions of dollars went down in a matter of days, right? That's a major resistance level. So let's not, fool around. I don't care what stock you're in. In general, the ones which are market correlated, they're going to sell the market there because the people who got trapped here, that's what resistance is all about. They're going to get even and they'll say, that's it, I'm out. I got my money back. Oh my God, thank God. I believe in God. All of a sudden, every single atheist is going to be like, oh my God, I believe in God. You put me back. I'm even now. Let's say somebody had $100 here. They're back to $100 here. So that's what resistance is all about. So once it hits there, I believe there will be, you can look at this as a cup. You can look at this as a cup. There'll be a handle. And that handle could be, let's say we hit 27.25. Let's do this, chart it out. And my accuracy rate on this type of forecasting is literally bar none up there. So 27.25. And the only reason my accuracy rate is so precise is because the markets are so mechanical. You guys can do this charting, to be honest with you. It's not, markets are very mechanical, so I can deliver accurate inflection points on the buy and sell side with a high level of accuracy. That's all. So 27.25 pulls back and tests the bottom of the breakout of the cup, which was at 26.80. So it kept on talking about, right? So it drops to 27.25 to 26.80. That's 45 points multiplied by 7. Just to converting it into conversion into Dow Jones Industrial Average, that's 315 points. So we could easily drop 315 points fast. Once it hits that 27.25 level, maybe it overshoots. It could overshoot because there is so many bears out there, so many puts still laid out, and so many shorts screaming and shouting every single day that the markets can't go higher. Yet corporate earnings are coming in strong despite IBM's blowout. IBM always like to, for some reason or the other, IBM's like, one of those companies, either they go up a lot or they come down a bit. It's down a couple of points, percentage-wise, quite a bit for IBM. So the thing is, on general, companies delivering strong numbers, and it just started. Earnings season just started. So we will drop 315 points fast. That's a handle, right? That's your cup. That's your handle. Nothing, no rocket science there. Now, what if the handle breaks, right? It's a very volatile market. It comes out a 6 a.m. tweet that Trump has decided he doesn't want to meet the fat guy in North Korea. How about that? Or he decided, whatever, one of the crazy tweets that come out. Not the constructive ones, the crazy ones. So that's one of the biggest risks to the market. Even the most hardcore Trump team members will admit to the fact that those are some of the most dangerous tweets because he doesn't get them passed. He just sits there, wherever he's sitting early in the morning. and he's tweeting out. It comes as a surprise to a lot of people within his team. So bottom line is that what if this handle breaks? The handle breaks, we are back to, and by now we know exactly what those levels are. This line here, the 150-day moving average, 2651. And if we break 2651, so that's another 30 points. That's another 200 points on the Dow, right? 30 points on the S&P is multiplied by 7, conversion rate, roughly 210 points on the Dow. If we break the 200-day moving average, 150-day moving average, we're going to short the market hard. Why? Because the 150-day moving average is a very significant. Because if we drop below that, we will be losing the 50-day moving average again. Remember that, right? 50-day moving average, right there. Right now, it's running at 2688.70. Of course, it's not a static number. It moves as the markets move. But right now, it's at 2688. So if we lose 2688, the 50-day moving average, then there is a high probability that we break below this neckline. Remember, this is a cup. There's your neckline. And it broke above that. So somewhere around 2775 is really the neckline. So if we break that, we're moving, then we're going to move fast and furious down to 2651. That's a major support level. Major support level, the 150-day moving average. So if it breaks below the 150-day moving average, can't hold it, then we're going to move real fast down to 2600. Don't freak out. It's going to be back in that trading range. We have survived and made money in most violent U.S. financial markets that we have witnessed in God knows how many years. And that's one thing I mentioned in my last video. That members who basically didn't just sit there and say, I'll wait for the best time. Well, the best times came and went, and you guys weren't there. Many of you weren't there. These are the best times. But the ones who basically attacked the market, made some money, lost a little bit, made some money, made some good money on these big type of moves, did some quick puts when I started to see this type of candle develop, tripled their money within an hour, 2 hours on that trade, whatever amount they put in. Those are the people, those are the members who are at this point gold star traders. Up there. Live, not dead. Okay? They're the ones with the medals because you can handle any type of market that can be thrown at you. Because you have gone through the war. I mean, this is not war. This is urban hardcore guerrilla warfare. Tactical trading. You've gone through it with whatever amount that you did. Doesn't matter. Whether you lost or gained, it doesn't matter. You did it. And because you did it, I can assure you, and I've been doing this for a while, believe me, and I'm no genius, I'll tell you that right now, but I'm experienced, which is bigger than being a genius, and I survived. That was bigger than being a genius, all right? I can assure you guys that the ones who basically traded somewhat in this zone, my hat's off to you guys. Why? Because you will be able to handle whatever the market throws at you going forward. Because what we went through, guys, and don't take this lightly, what we went through, and we might go through this again, 600-700 points on a blink of an eye, boom. And I'm showing it, we're shorting in the middle of the day, we're going long at the close, whatever, things that I did and made money and helped you, many of you, make some serious money. And the ones who participated since March, or I should say since going back to February, my hat's off to you guys, ladies and gentlemen, because you can trade any market that's thrown at you. And your confidence level going forward is going to be dead strong, like a laser focused warrior, like that motivational thing that I put out there, because this is not normal, and it doesn't keep on happening every month. So the ones who didn't do anything and just sat around and whatever they did, right? I can assure you that you have missed out on one of the most rewarding experiences that you will never have. And you, and because you missed that, you will, the next time when the markets get super volatile, you will be far more nervous, far more scared, and keep on making the same mistakes. The good news for the people who basically SOA'd, you know what, sitting on you know what, and just sit in their bunkers and you just, whatever you guys did, the good news is that if you're part of Clueless A trading, at least you know the mechanics of how these things work. You can review these things. You can mentally prepare for the battle that is every day. All right? But the ones who went through this, I'm telling you straight out, and I'm a straight up guy. Ladies and gentlemen, my hat's off to you. And the ones who actually came out net positive, my hat's a double off to you guys. And the ones which hid in the bunkers, crawling, grabbing the adult diapers, and whatever you're doing, on a positive note, at least you know what we did, and I shared everything with you guys. So you can review those and be prepared. And the next time, you won't need that big box of diapers. All right. On that note, I had to say it. On that note, I'm very proud of many of you. I'll tell you that. I'm very, very proud of many of you. And with some of the people that I know and I care about a lot, with some of the members that I know personally, some of you, I'm very disappointed. But doesn't matter. Turn that disappointment, your own disappointment, doesn't matter what I'm disappointed or not, okay, into success. That's my motivational plug. All right. So at this point, you can clearly see here, this is the big supply level, and that's at 27.26. It's possible because of the deep skepticism, the high put call ratio, and stuff like that. Which really, the put call ratio is really a key indicator of real market sentiment. To be honest with you, the VIX really isn't. To be honest with you, the VIX is sitting here at 15, cracking down to 14. Yet everybody's dead scared. So what is the VIX really telling you? Nothing. You know what I'm saying? The VIX should be, is everybody? The VIX is telling you everybody's all complacent. No, the VIX is really measuring the movements of these big cap stocks which are moving violently higher. It's not measuring the true trader sentiment. Okay, so because traders are certainly, they are majority bearish, or not, participation levels are very low. So the VIX is not indicating that. Okay, the VIX should be, if that was indication, VIX would be higher. So what I would say is the put call ratio is still running quite high. We're going to look at a significant chart today, which is the New York Stock Exchange Bullish Percentage Index, which will show you the number of stocks which are in the bullish range, and you're going to see it's far from overbought. So all that is the real technical indicators. So at this point, it's possible that we break out, and 2750, like I said, you guys can clearly see it too. It doesn't matter what I say. It's all in pictures, all in visuals here, is a major downtrend line. If we, at this point, there has to be selling. If there is no selling and it goes straight up, well, great. If it goes straight up, then you're going to get ready to short really hard at around this second major supply point or breakdown level, which is around 2760. Okay, 2760, right there. There's breaking news right now. The new CIA director, Mike Pompeo, who I said, even though my top guy, left, was fired or asked to leave, Rex Tillerson, Mike Pompeo is also a terrific gentleman and very well Oh, where was the breaking news? The breaking news was that he has actually secretly met with North Korean diplomats or with Kim Il Jong. I think that's what I saw to set up this meeting, which is monumental with President Trump. That's big stuff. Futures love it too. So anyway, so that's it, 2760. So you got to be a short at 2760. However, as tactical traders, we look to see the reaction at these inflection levels, because that's the beauty about tactical trading. We have our own opinions. I have my own fundamental macroeconomic, global politics, all that stuff in my modeling, right? Behavioral, retail trader sentiment, stuff like that. But what really matters is take that in part of the modeling. But what really matters is how is the market reacting to some exact inflection levels, as we call it, right? Because just like I say, your opinions and thoughts and stuff mean nothing. And you guys know that repeatedly. It means nothing. My opinions and thought in the bigger scheme of things mean nothing either. Even though I'm a heck of a lot more knowledgeable about the markets and global politics and US politics and stuff like that than most of you. That's a fact. But it means nothing. So see the reaction at this zone. If they could bust a move over here, I can assure you, we are going to move fast and furious to the next supply zone, which is right here, all marked 2807. That's a major pattern completion. That's a major pattern completion. So, but I'm not going to project from here and say, oh, that's definitely it's going to go there. I take things step by step. And I can assure you that if we break above these levels, there's going to be a lot of new money. I'm sorry, not new money, but this SOA money sitting in the bunkers that are going to be entering the market hard, because the media is going to be super excited. Everyone's going to be screaming, oh, yeah, this bull market's back, blah, 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 blah. And that's going to be from a pattern symmetry level, wave what? You guys know that by now. Wave 5. Wave 5 is the most dangerous wave. That's when people do stupid things, like buy the tops or short-term tops. Then they lose their shirt. They lose their whatever. Their wife shut down their trading. That's what I heard from 2 members. So bottom line is, it's not funny. You're a married guy, wife shuts down your trading, you're done. You're finished. Doesn't matter how much money somebody's making, an opportunity to make back that account 3 times over, it's over. Right? Happy wife, happy life. So bottom line is that's the euphoric stage that you should be lightening up hard, while the rest of the lemmings chase and possibly go over the cliff. Because once we get these levels here, which is a high probability, the way things are looking, just so you know, after these, after every time you hit an inflection level, supply level, you do some pullbacks. But it gets there. If I was a complete robot, then you just simply draw the line. This is what's going on. So can somebody tell me, if you look at just this pattern, forget about anything else, just laser focus, please, guys. Okay? If this is the pattern, and we got up here, then what does it look like? What's the next move? What's the next move?
$2,800.
No, that's not my question. Pattern-wise, once it hits the 2,800 level, that's a massive, massive resistance. The next move is basically this supply zone. This is pattern recognition. Very easy for you guys to do. Every time you see a big fat red candle that's breaking down, that's your supply zone. Every time you see a big fat reversal hammer, that's your demand zone. That's where the buyers step in hard, or the so-called mechanical money steps in hard. But once it gets to this level, in my opinion, we are either going to fall hard and come down, 28, 25 and down to 27.50. So that's 75 points times 7. That's a 600-point drop. Or we are going to pull back a little bit and hit the highs. So these are the two possibilities, okay? And once we hit the highs, we'll see what happens. I don't personally think we're going to hit the highs that quickly. And I'm bullish overall. The pullback is, Exita said 2800. The pullback, once we hit the 2807, how can the pullback be 2800? I don't quite understand it. It's going to hit here and just go down like this. That's it? That doesn't make sense. The pullback is going to be down to the downtrend line. This is your massive downtrend line. If we break out of here, then the pullback, technically speaking, for the bulls has to be somewhere down towards the 2750 level, because that gives you, it's like a catapult move, right? A slingshot move that gives you the energy once the profit takers are out, then to move fast and furious up. One second. Pullback. Okay, I didn't quite understand. Pullback from 2800? Yeah, from 2800. Yeah, I get it. Yeah. So, but I'm not going to project that far. Keep an eye on the bigger picture. This is a very powerful suggestion to all of you. To all of you. Keep an eye on the bigger picture, like we're doing right now, and trade the short to intermediate term. Intermediate term. Okay? Don't be sitting there thinking it's definitely going to go there. One way or the other, I said we're going to go here. We're there. Give or take a few points. We're going to see the reaction at that level, because this reaction could be violent for all I know. I'm just giving you both sides of the picture. It could be just like that. Like I explained to you, we lose at 150. It can happen within an hour. It can happen within an hour. Trade war picks up hard. Trump goes nuts on the Chinese. The Chinese retaliate hard. What do you think is going to happen? The market is going to sit there. We're going to drop 1,000 points in 20 minutes, in an hour. So it's all a possibility, but we're back in that zone. That's why I said people who operated in this zone to whatever capacity they did, they're not going to be that scared. They're going to understand my charts 110% because I've gone through it and survived. So for now, this is what I'm looking at. Okay, real quick. I don't want to spend the whole night on one chart. This is a very powerful. This is surging. This is surging. It's a gaping mouth on the stochastics. It's surging. Very powerful. It's getting overbought, no question about it, but you can get overbought and stay overbought for a whole bunch of weeks. That's what happened in January on wave 5. Remember? I'm sorry, in January, and then February it crashed. So this was wave 5. So is it possible that we make a wave 5 type of structure? Possible. Not likely, but possible. And we keep on moving sideways. We shall see. I believe that after this volatility, the scars are so deep that mom and pop is completely out of the picture. You can write like $1,000 checks to them in the form of telling them, okay, buy this. It's the same thing with retail traders. And they won't take the money. No, thank you very much. No, I'm not going to take that money. You're literally giving them trades which are worth hundreds of dollars, thousands of dollars, and they're like, no, I don't want to do it. Okay? So I believe that is the case with traders, the average emotional trader, and with mom and pop. So I don't think wave 5 will happen. Okay? Because they'll be like, no, it happened last time, and see what happened? So, okay, great. So that will just keep the money inflow into the market to a minimal. For now, focus on 2750. That's all. This, by the way, there were 2 patterns here I'm showing you. These big rising wedges. This, by the way, can somebody tell me, what is this pattern? I know you guys know it. Just think of what does this pattern look like? because this has a lot of meaning, what I'm asking. This, and by now, you guys need to go back and memorize, literally memorize technical patterns, which is on my Clueless YouTube video channel under basic chart pattern analysis, because a lot of you are still very rusty. So when you look at this here, okay, when you look at this here, what does this look like? It's a rising wedge, okay. This is more of a rising wedge. It's a rising wedge, which can also be, thank you for the answer, it's a rising wedge, it's an ascending triangle, right? Ascending triangle, remember I told you it broke out of the ascending triangle, just like I said, right? This is an ascending triangle. This is a rising wedge. But if you have, and this is like advanced thinking, because this is still a bear flag, guys. See that? That's still a bear flag. We haven't broken out of the bear flag yet. Does everyone understand that part? This, the bear flag looks like this. Big crash, and then they go higher. And then boom. Comes back to retest these lows again. See? Everyone understand that? Good. So don't get all happy and stuff, all right? I'm never happy. I'm always, I'm very happy overall, understanding things. I'm not that crazy happy about my performance. I could be doing a heck of a lot better because I'm doing smaller. My trade sizes are smaller. They're delivering the goods because I know that with the VIX at around 15, I don't want to go nuts. All right. So this is still a bear flag. And this bear flag can very easily do this. Just the way a rising wedge does. Come back and retest. Like I said before, it can easily retest the 150-day moving average. And if it breaks that, boom. So why is this important? It's important because you will know when I'm showing these charts in the middle of the day and telling you to buy those SPY puts at $1, $2, and they go to $23. This time you won't be sitting around saying, yeah, I hear you. Yeah. Right? That's what I hear from people. Should have done that. Yeah, I know. Stop saying these crazy words to yourself. Act on it next time because you're prepared this time. I'm preparing you guys with these webinars middle of the week when I could be just sitting and relaxing a bit. So next time, don't just look at things, act on it. Because if we break this rising wedge, rising wedge, and if this is a possible big time macro bear flag, then we could easily get 400 points down fast. And it's going to happen fast. You know that. So get with whatever. Small amounts, doesn't matter. Put and act. Because when I showed those SPY puts on days like these, days like this, they were literally one or two people who did it. And they were literally, they were just, it doesn't matter if you have a long position. You can do a hedge. It doesn't mean your whole account has to flip over on the short side. But you can do a hedge, which just explodes and gives you 400% in 30 minutes. And I've shown this repeatedly. Just don't do it next time, guys, all right? I keep on telling myself to react faster, but now I'm really more prepared because I've already gone through it. I know that when the violence comes in and the VIX really wakes up, it's not going to be like, oh, we're going to be down 30 points, Boom, it's going to be 200 because that's how the market is wired right now. So don't just sit there. So on the long side, we know the story. We'll see how the market reacts at this level. And if we start to see sell-offs and I'm putting those triggers out, at least participate. Don't be like, I know, yeah, I could have, should have. Stop saying, stop. It's poison for the brain. You know what I'm saying. All right, let's get out of this chart. So we're good to go. Everything's looking good, but still a bear flag. The 50-day moving average is at 26.88. That's, that's what, 12.25. 25 times, so it's roughly 175 points lower. So we could very easily do this. Test the 50-day again, scare people out if it falls a little bit. Doesn't matter. This is the level that I'm watching, the 2675 level. So even if it slips and slides, doesn't matter. It could easily come down here and then bust a move towards 2750. This could happen by tomorrow on the Fed meeting minutes coming out. Oh no, the beige book is coming out, which is a release of the what the Fed thinks of conditions, economic conditions. The Fed meeting minutes is what they chatted about, right? The beige book gives you an idea of what their reading of the overall economy and the debt levels and stuff are. What if there's a couple of words out there? Because the Fed is worried about the fact that we're piling on debt like nobody's business. Our debt is like ballooning. So the U.S. economy doesn't grow to it at the 3-4% rate, and there's no guarantee it will. We keep on fighting trade wars, we'll be growing at 1%. Trust me. Okay? Who's going to finance the debt? We'll have it 2007, 2009 type of depression. I'm telling you right now. Real estate's going to collapse. Really, these things can happen. Except they don't happen in one day. They kind of slowly happen. So what if the beige book mentions some, cautionary words? We'll drop 200 points within minutes, guys. All right? So wake up. So we could easily drop down here, and then the market could take off. Or if it does this, you know what to do. Just follow my alerts. You know how to read the charts. Any questions on this, please? Good. Now let's move on. So this truly is, I didn't just say it from a marketing standpoint, this truly is the ultimate trading chart. You can trade this all day long with small amounts of money. All day long. There's nothing really to explain here unless somebody doesn't understand anything I put there. We're in a wide channel. You can see that clearly. And each of these candles, these are the breakouts when the market all of a sudden, goes from up being 220 to like, boom, 300. Okay. That's just 2 buy programs that went into play. Right after that, they sell. I already have a line drawn here, not for fun, telling you that that's going to be, that's where they're going to hit the skids a bit. Fine, it did it. Right there, the sell programs came in. Is that highly negative? Not necessarily. Because it's a strong market, right? It's not just one chart. It's a strong market. All sectors were up. We had a roughly a 3, no, not quite 3. We had a 2.5 to 1 advanced decline. The AD line was like 2.5 to 1. Good stuff. Main stocks were higher, but the Boeings and all those type of companies, Caterpillar and the big Dow components. Goldman didn't matter today. Made money right off the bat. Got out. Boom. Stock went down. Should have shorted it, but who cares? The rest of the stuff was going crazy. And I don't like shorting Goldman in the middle of a highly charged up market because you turn around and just eat your head out. I mean, it bite your head off. So doesn't matter. So that's it. So this is your trading chart. You can monitor it on your own screens. And if you're not using investing.com, I don't know what you're doing. Okay? Easiest thing to follow. And you can clearly see what these charts are saying. So at this point, again, it's a 15-minute chart. It tells you what's happening intraday. Any questions on this chart, please, that somebody doesn't understand? All the levels, I try to put all the buy sell levels as accurately as possible, so you guys don't have to do too much thinking. All you have to do is look at it. It's not a straight line. A lot of zigzags. Every 15 minutes, little sell programs, buy programs. Look at the overall trend. And I think this is where the markets want to go, which matches with what I just showed you on the SPX. Right? Around 27.30 or so. If tomorrow works out, this is where we're going to be. We might be there right at the open. Any questions, please? No? Yes? House?
Nah, no questions.
Good. All right. This is the same chart, cleaner. You can see what's going on. All these levels are marked. If it fell, then it'd be 2,700. This is the upper levels. Okay? So it's the easiest chart that you can trade off if you're trading the spies and all that stuff, or if you're managing other trades. This is where we are. You can clearly see the uptrend is fully intact. Now, one of the things that I saw today, which told me that this market was going to go bonkers, is till 10:30, we were still in a rising wedge. Watch. Okay, before I go into this, I just want to remind you guys of something. There's a lot of trading services out there. I was in a lot of trading services. Real technical guys and stuff like that, right? Nobody takes this much time and energy to show you how the method works or how I see it, which works, is, has a very high degree of accuracy. They just send you a chart, they just send you an alert, and it's over. Or they walk you through the charts like, okay, this is going to do, this is going to. I'm showing you things that I notice. So you guys can enlighten yourself and manage your trades better. So respect that, guys. I know you guys do, but I just want to remind you. Sometimes I think like, why am I explaining so much? I just put out stuff out there and let them do what they want. But deep down, I guess I am a nice guy. I don't know. I don't want to be nice, but I guess I am. So, you know,
Hey, Clue.
yeah, go ahead. I haven't finished, but go
I got
ahead.
a
Go ahead. Go to the
okay.
question. No, go ahead.
My question is, the charts are amazing, obviously, and especially intraday, it's a lot easier to follow it.
Go ahead.
But overnight, how do you have any just one macro methodology to how you manage your trades overnight?
How do I manage my trades overnight? Meaning what? Like
Yeah, if you
position.
have a long term,
Oh,
if
like
you have a
positions that I carry over.
yes,
Yeah,
exactly.
I obviously have a method. Otherwise, I'd be really clueless and stupid. Of course, I do. And those things, like I always tell people, you want to get into the nitty gritty of it, then you got to do the sessions. Yes, I absolutely do. And one of the simplest overnight strategies is based, number one, on the charts, whether I see it going higher or not. Number two, the amount of money that I leave on the table overnight is extremely important. If I'm up a gazillion bucks on a certain trade, I'm going to take down, like I alert you guys, take down partial to full profits with keeping the core positions intact. Or if it's a small trade or a scattering of small trades, fine, leave it alone. So there are many. You see, everyone has their own style. So it doesn't matter what method or it is. I'll walk you through. I'll teach you it, and then you'll have to adapt it to your own style. There is no 1 + 1 = 2. Many times it's sold stuff, and I regretted it because the next morning they're up a gazillion points. But that's okay. Yes, in answer to your question, there are specific rules you can apply to managing your trades depending on your trading capital, depending on your what diversified positions that you're holding. And for those, you got to do the advanced coaching sessions. And I'll share my insight in how you can do that. So, okay.
Okay, thank you.
Yeah, no problem. So looking at this chart here, you see exactly what's going on. Futures are up like 4 1/4. This is a cleaner chart. It's telling you. Oh, this is what I was going to say. I got. So at 10:30, things are like, it's top of the fall, rising wedge, which generally means that we'll pull back a little bit, because we're overbought. So I bought a couple of puts as a hedge. Didn't work. I'm sorry, down here. Here. It's overbought. No, I didn't buy puts at that time. I bought the puts here. And I bought the puts here, and then the puts, and then the market just went boom. So they were down by like 40%. But they were just bought a small amount, just in case, things happen. And then and then right after the close, it pulled back, and now it's rising again. It doesn't matter. So this is what I noticed, and this is something I want you guys to focus on, because this is where the real money's made. At around 11 o'clock, 10:30, we're on. Here's your rising wedge, right there, moving up. I'm thinking, okay, let's see how it reacts here. All of a sudden, this just goes nuts. The breakout, and the market hits. The market just goes. That's when you know that a big buy program came in and it's killing the shorts. So when you get a rising wedge and then you get a breakout like that over that, it's telling you the market is strong. So you want to hold on to your positions and add to any other positions that are flat to slightly down, depending on that individual stock. It's a very powerful move, bullish move. I even put that there on my tweet, that when you're going through a rising wedge and then it just pops over it like that, just the way it did here, that's powerful. This market wants to go higher, and we know what level it wants to go. So saying all that, by 3:15, this was this, and then this was 4 o'clock, and this was temporary because IBM was down, and IBM's is a Dow stock, and this is where we are right now. So anyway, skim through some charts. So we know this one. This is the same chart, except it's giving you more specific levels for you to operate in. This is the ultimate swing chart. I've talked about this, and people tell me, "Oh, I'm really busy during the day. I can't really watch things." Okay, great. Why don't you just watch one chart? If you want to be a swing trader and you want to hold on a position and you don't have the luxury of looking at things, all day long, then just follow this one. It's not rocket science. And many of my traders who are very busy during the day, high-level jobs, run their own businesses, they don't really come in the chat room that much. They follow this and make a crap load of money. This is your daily. This is your daily swing chart. I've been talking about this from all the way down here. Stochastics keep on moving higher, even in the midst of 800 point drops, and 800. Sorry, we never really went up 800 points in one day. We went up 600. All through this volatility, the stows kept on going higher. It's a positive divergence. That's exactly what's getting played out right now. Now we filled the first gap. Not much to say here. We'll see how the market reacts to it. It is overbought, and it filled the first gap. It blew through the downtrend line, which is a major downtrend line. This didn't matter whatsoever, even though that was a down day, which was 2 days ago. So it reacted. First reaction is obviously a sell. You hit a major downtrend line. It's like driving fast, and you just hit the main resistance. So you hit the roadblock. Boom. The next day was a doji. It wants to go over the downtrend line, and this is today. So the first time anything hits a downtrend line, expect selling. Standard procedure. What's the big deal? It's how it reacts below that is what matters. Now, there's a couple of things. One of the things that I introduced, what did I introduce today on my charts that wasn't there before? On this particular set of charts, what did I introduce? I even wrote it down a couple of times. Observation and focus is I would say 70% of trading. So what was that I introduced that wasn't there before? And I even mentioned it. So it's not a quiz. Look at the chart carefully and please tell me. Guys, you're looking at it, so tell me. Is anyone still there? No, there's no pivots here, Exita. Where do you see pivots? I never show pivots on investing.com. The only time I show pivots is on the Algo HFT charts, the quad charts, which I highly recommend that all of you start using. There are no pivots. What is in here that wasn't there before? See, this is a prime example, guys, that you guys are focusing, but you're not focusing. And that's why most of you are not making money. I'm sorry. I introduced something that is going to be of huge help to you guys. We got these lines here. This is the SMA, simple moving average, and the exponential moving average crossover. And I said, wow, this is an incredible tool. And these are these lines. And these plus signs automatically are generated by the when these are crossing over each other. So you can trade or you can trade the SPYs, the SPX, individual charts based on the 20 simple moving average, exponential MA and EMA crossover. I'm pretty shocked, by the way, guys, that even despite the fact that I put it down there and I'm showing it to you guys don't start focusing. Seriously. Whew. That was a good one. Okay, so now from now on, you're going to see these lines. These are I always use these on all my other stuff, right? The 20-day, the 5-day, the 20-day, the 34-day, the 50-day moving averages. I always use that on my Thinkorswim charts, but not here, not on investing.com. On investing.com, this is the first day that I put it. And I was really hoping, with a big smile on my face, that one of you would step up and say, yeah, those lines, the moving averages. So treat it as a lesson to yourself. When I write those words, focus, understand, act, and profit, I mean it. Any one of those ingredients you're missing, you ain't going to make it. All right. So this is a highly effective tool. This is your 20-day. This is the daily chart, right? This is the 20-day. And this is not rocket science, guys. This is not like heavy duty technical Elliott wave theory, like, like, whoa, your head's spinning. This is simple stuff that's going to help you manage your trades better, stick to a trade. It answers a lot of doubts in your head. That's what charts are meant to do. So at this point, this is your 20. The green one is your SMA, I believe. Let me see here. Coloring. Yeah, this MA simply means simple moving average, the regular moving average. Okay, so this is your regular moving average, the reddish one, and that's your exponential moving average. Don't worry about the difference. Go to Investopedia. You can read on it. That doesn't matter. What matters is the visual representation. You can clearly see here they're starting to turn. You can also see here that the distance traveled between this is known as standard deviation, as you know. Distance travel from these moving averages was significant. We were going to go back to the moving averages. In this particular case, being a trader, this is a tactical trading chart. I'm using the 20-day moving average. That's it. Okay. It's a crossover here, very bullish. That's why you see a little cross. I found this indicator here and I said, this is great. It automatically generates these little signals and stuff, so I don't have to spend more time identifying and showing you with all this stuff that I do for you guys. So that's a crossover. That's intact. Now, so it's this starting to curl up. When this starts to curl up, we're going to be up here. Okay? And because they're lagged by, it's a 20-day exponential moving average. So it's 20 days of values added together, right? Average, that's what it is. So it doesn't change in one day, but it's looking good. And now this is going to be used as a reference point. If it breaks below the 20-day, simple. You're more, the market basically is more biased towards a downside move. So if we all of a sudden lose both these levels, then that means we have a good shot to go down and test these levels again on the daily charts. The abyss, while the world is screaming, we are going to be making money because we'll be short. Only if we see on a swing basis on the daily that both these lines were broken. Now, if both these lines are broken and you get a big fat candle like this, the lines could still be going higher, yet we might have a red candle that comes down and retest, not necessarily, yeah, retest 2600. What would that be called? If the moving averages kept on moving higher or flat, but we had a big fat ugly red candle, what would that be? Somebody step up and tell me. I've already mentioned that before. A positive divergence, my friend. You're on the right track, but you're upside down. All right, Trent? So I give you A plus for effort and a D minus for understanding. Okay? If these are moving higher and we get a big fat red candle like this, just the way if the stochastics are moving higher, and we got these ugly red candles, but the stows kept on going higher. The prices are making a lower print, but the internals are telling you they're going higher. That means it's a positive divergence, because the internals are the heartbeat are telling you the patient is healthy. External is telling you the patient is piss drunk and fell on his head. Okay? So even if we get one of these candles, but the moving averages stay intact, sideways or higher, that means it is a buy signal. Do you understand that part? Yes? No? All right, I don't want to delve on it. I think I made it clear. The moving average is very important. When the moving averages are moving down or flattish to down and the market keeps on going higher, in that case, Trent, it's a negative divergence because the prices are moving higher while the internals are going lower. That means at one point, it's going to be all the way down. Understood? Yes? All right, no response. Okay, good. So that's it. So this is your swing chart. And to me, these are the levels to watch. 273 when you're doing the spies. Spies deliver the goods. The full pattern completion is all the way at 2800. I'm not even looking at that for now. Okay, I'm looking at these levels where there was big time selling right there. Right there. That's why there's big fat red arrows there. But you can trade these things. So in answer to House's question, which was a very good question, overnight risk, you can follow these charts and then see whether or not it's worth holding overnight risk to a large degree or just a small amount. If we're getting close to these major inflection points where there is inevitably going to be profit taking, why do you want to carry too many things overnight? Okay. This is the same chart of the E-minis. I'm sorry, of the S&P 500. Exact, no conversions needed. You can see here we closed the gap, and right at the gap there was selling, minor selling. Moving averages are exactly the same. This is looking good. Okay, stochastics are looking good. This level from another 50 points from here generates 350 points on the Dow. They're going to do some back and filling before they do that, or maybe not. I don't know. But I know at this level, around 2750, which is the major downtrend line, the first one taken out, like I said. The second one is going to be a big one. There's going to be a fight at that point. And the bulls win the fight, we're going to go straight up to 2800, but that's only another 50 points. So you're talking about another 300 points. And there's going to be, there has to be some major selling. Has to be. If there's not, then that's not good. Remember, somebody who's bullish bias needs to see corrective pullbacks in order for the markets to go higher. I hope you guys all agree with me. Markets in a straight line up are disgusting markets because you don't get a chance to buy these beautiful prices that you saw. These were the times that I kept on screaming and yelling through my alerts, buy, 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 buy. Individual stocks can do whatever they want. The Chipotles of the world don't give a hoot what the hell's happening with the trade wars. Okay, you can see that that thing is probably going to go to $400 by earnings. So that's it. Any questions on this? This is your actual S&P. The only thing I want to say, you can the pattern's very clear. What's going on? Okay, probably pull back a little bit, or maybe not. You're going to get here. The problem with price chasing traders, which most of you guys are, with all due respect, is that the prices don't tell you what is really going to happen. The prices are telling you what is happening right there. So if something is up, what do you think we want on Netflix? I love the fact that Netflix was down $10 before earnings. And of course, that is an element of luck involved. But that company's going a lot higher anyway. It's the fact that if you're just chasing prices, you're falling into the bull trap, or bear trap, I should say, or bull trap, right? Yeah. Because they know that if they keep, the algos know, if they keep on moving the prices, the Johnny-come-latelys of the world are going to keep on getting excited. And right there, they're going to slaughter you. And don't tell me that hasn't happened to you guys. So the charts allow you to escape that danger by looking at all these different facets that we look at, so that you don't fall in the same trap. Price chasing retail traders, and I'm not saying momentum trading is not. Price chasing is fine if you do it on a reasonable basis, because price as it moves higher, if the internals are cooperating, you should chase the price as much as you want. It doesn't matter what the stock is, because a new high will make a new high. So in that case, price chasing is good. But price chasing and just trading prices that you're looking at, which most of you do, unfortunately, and the internals are not cooperating and they are way overbought, or something negative divergence are happening and stuff, and I'm showing that, and you're still chasing the price, you are going to be shot. Straight talk. Okay? So keep on price chasing. It's not going to do anything for you. Got to be internals cooperating with the price movements. Okay. Two charts I'm going to show. We're going to wrap this up. First is first I'm going to show you is the swing. Is the swing 533 charts. Okay. I got to get these ads out of here. Okay. So the swing 533 chart is cooperating fine. When all this thing was happening, I was looking at it. I showed it, I think, twice. The internals, the MACD histograms were shrinking from deep negative levels when we were at the bottom. And despite the volatility, they kept on moving higher. So that told you that the market wanted to go higher. Okay? And that's what it's doing. Now it's getting overbought, and we'll see how it reacts at that 27.25 level, which happens to be the upper Bollinger on the swing 533. We are also went from deep oversold on the RSI to moving now towards the 90 plus 100 zone. So we're getting overbought. It's pretty simple that we're getting towards that 27.25, 27.50 level where there's going to be selling. So this swing 533 is telling us the same thing. Now here's the interesting part. Okay? This is the daily chart going all the way back to December of 2017. When I look at the weekly, the stochastic crossover just started. It's just big stuff, guys. Okay? So while you're moaning and groaning that the market's down 50 points and you're wondering like, hey, what the hell's going to happen? I'm telling you right now, looking at this chart, that on a probability basis, we are going to basically go up for the next couple of weeks, which happens to be the end of April. Or first week in March, May. When's Memorial Day? What day is Memorial Day? No one know that answer? I can never remember.
It's the last Monday of May.
Which is what date? I'm looking it up. Hold on, House. really bad with dates. Okay, last Monday of May, right? So last Monday of May is the 24th, is the 28th. 28th of May?
Yep.
Okay, good. So pretty much we are going up and for a good portion of May. Okay? Now barring other stuff, if the world just stopped and we were just playing technicals, doesn't work like that, right? This is telling you with a crossover right there, easy to see that we are targeting the 2850 level, testing the highs. Now, that's what this is showing, the swing 533. This is very positive. This is a weekly thing, not daily. We're climbing. Second week in a row, we're up. This is barely at 70 plus 80. It needs to get overbought to around 90 on the weekly in order for the market to basically hit severe overbought conditions. And that happens somewhere between 2750 to 2800. Magic. This is very interesting. All right. The internal MACD histograms are starting to shrink. By the time they go flat to slightly higher, like it did on the daily, except in the daily it takes a couple of days. In the case of the weekly chart, it takes a couple of weeks. Simple. By the time it gets up towards, if it gets positive, I can assure you that will be, by the time it goes positive. If it does, I don't know, because they keep on shrinking, right? That's how it works. Then we are going to be back towards that testing the highs. Now, one second. Now, you guys don't need to, I'm not asking you to, when I show it, at least I'm telling you how you read this and some of the things that I look at, among many different things, that tell me what to do. Now, this is pretty goddamn bullish, all right? This is really bullish. This was back August of 2017. 2017. Look at this. Look at this. Forget about technicals. Just look. Does this look similar? Yes or no? Okay.
Yes.
It looks similar, obviously. Okay. So if this is going to be a repetition of that, then we are going to basically have a multi-week rally that will take us into that 2800, possibly an overshoot towards higher levels. I'm not even counting on it, but I'm just looking at the technicals. Now, the interesting part is, if the stupid ad from JP Morgan goes away, is the fact, which I find to be extremely powerful, is we got so deeply oversold and the trauma was so severe with the intense volatility we incurred over a matter of 2 months. And so many retail traders just not only went into the bunkers, but can't get out of there right now because they lost the keys and they're banging on the doors, like I said, that this MACD function, the MACD histograms are telling me that by the time they do find the courage, the key to open that door and actually buy something, these will start shrinking. That's the underlying pressure, is what the MACD histograms weigh. For an exact definition, go to Investopedia. So the fact that these are shrinking, it takes a couple of weeks. What if they shrink and go positive? Oh, Lord. That's when we go make a new high. Will it do that? I don't know. Maybe there was some severe damage done on the underlying market that cannot be repaired short term. Fine with me. But if that's not the case, then these histograms shrinking every week is an indication that regardless of what happens on a Monday, Tuesday, Wednesday, or a Thursday or a Friday, the market wants to slowly creep higher. So that's a long-term view of the market. Let's move on. The last chart I'll show, the second to last chart, is your McClellan oscillator, which is basically telling us that we are getting close to that overbought zone. So I don't care what stocks you're buying or whatever, don't lose your shirt. Okay? Don't lose your shirt. Don't give back all your profits, because we're getting there. The McClellan oscillator is at the upper Bollinger around 57. This is still telling us we have room to move, but the McClellan oscillator getting into the 57 range means that there is a big fat sell program coming, That might last a couple of hours, or it might last a day or so. End of story. Okay? Because these are levels where you want to be somewhat cautious. These levels, not necessarily short, but reduce your long exposure from a trading perspective. And these are the levels you want to buy with eyes shut, which no one does. Okay? And now this is the ultimate indicator. Says, oh, snap. It's gone. It's gone. So the last chart that I'm going to show you is your bullish percentage index. All right? New York Stock Exchange bullish percentage index. For exact definition, go to Investopedia, type this in. Okay? New York Stock Exchange bullish percent index. It measures the index of how many stocks are bullish from a technical standpoint or bearish. So percentage of stocks listed on New York Stock Exchange that signal a buy. That's it. So when you're looking at this here, what and I'm asking you guys this question: what percentage? This is your percentage column. What percentage of stocks right now on the New York Stock Exchange, the big boys, are flashing a buy? Like
About 55%.
That's right. That's correct, sir. 55%. Now I charted it because the chart tells me whether we are overtly bullish or we are crazy bearish, technically speaking. So technically speaking, as you can clearly see, that when things went nuts and wave 5 occurred at the top, 76%, 76% of New York Stock Exchange stocks were in crazy bullish thing. That's when the kabooms in the room were resounding big time. Now not a single person even says good morning to me, which is not very nice, by the way. Not that I care. You know, everyone just watches from the sidelines like, oops, what if I stick my head out and buy that alert? Woo! Just kidding, guys, all right? But I do measure when my modeling, the way I do things, my member sentiment too. And I know exactly what the sentiments are. Okay, so this is an indication of the technical sentiment. Super excitement, wave 5, bang. Obviously went completely overboard. Now we are here. Now this is looking like a W pattern, which means we are going to hit around 60. We're going to hit the neckline, just like an S&P stock. We're going to pull back in a little bit. So, and I believe we will at least capture that. I don't think if we ever go to 77 on the BPNYA, the bullish percentage index, close your eyes and short the crap out of the market. But I can assure you, because this damage was so severe, even though we tactically traded our way through it, or most of us did, the fact is that the trauma is so hard that I'm still waiting to see some participation, higher participation by retail traders and my members in trading the market. Okay? So I don't think this is going to happen. Meaning like we're going to go back to 76. So whichever the case, you can. This is the chart, a visual representation of the bullish percentage index. 55 amount of New York Stock Exchange stocks are in bullish territory. Okay, over the 50-day moving average. I mean, this is your moving average. The 20. 1 second here. Here, the blue line. The blue line is the 50-day moving average right there. The blue line. Okay. So 55% is above the 50-day moving average. What about the remainder 45%? So that's what I'm getting at. Okay. So I think we're going to get up towards here, which means you know the story by now. So this is telling us that we are not at that excessive amount of crazy bullishness on a technical basis, not talking about retail traders hiding in bunkers, all right, or under the bed. The New York Stock Exchange stocks are not They're only 55% of them are above the 50-day moving average. When it gets above the 60, 70% range, that's when it starts to get overbought. Now, you don't have to worry about the numbers. You can simply look at the chart. If it goes RSI plus 70, that means a lot of them, we're in that zone. That means time to ease back. Does everyone understand this part? This is a very important chart.
Hey Frank, that's great. Can you possibly share that every week?
Yeah, I'll share that every week. Okay, just yeah, I actually look at it myself, but I will share it maybe twice a week. Yeah, I'll put it out there. Now, these charts, which are extremely important for people who are serious about making money. All right, not the ones full of excuses, but the people, real people who are serious about making money, is that end of the day, I put out very powerful charts which give you a summation of how the markets, did throughout the whole day. Very important that everybody take 10 minutes, scan through the end EOD charts, the end of the day closing view. I only post 3 or 4. Time to time, I'll post this one and the SPX 533 charts. So this way, when you go to bed, you know that you're not going to completely fall out of bed unless there are crazy black swan events, which is basically the China trade war, Trump tweets, North Korea doing crazy stuff, Iran doing crazy stuff, or whatever. Okay. Aside from black swan events, at least you can go to bed knowing that you know what the directional bias is. That's it. All right, guys. Taught you guys a lot. It doesn't matter who teaches what. Okay. Just remember one thing. It's up to you to do the right thing. All the tools are provided. Unbelievable trades have been provided. Don't have to go nuts. Do small amounts. But if you're not in the game, you will never learn. Life itself is the biggest teacher, right? Well, trading, active trading, not necessarily active trading, but trading, swing or day trading is the ultimate teacher. Don't forget that. Have a great evening, guys. You guys are the best. Thank you for being with us on the 4th anniversary, which was on Sunday for Clueless Trading. Pass the word along out there. We certainly need to grow. I just don't have the time or the energy to really market the service that well. So I'll leave it up to you guys to go spread the word. Have a great day. God bless you all. See you all tomorrow. Good night.